We are here with Dermot Smurfit, who is CEO of GAN, a company that just had its first Investor Day presentation on Friday. And GAN, first of all, congratulations on a successful Investor Day.
Thank you. I'm just sorry it wasn't the in-person Investor Day in the Venetian Las Vegas that we had hoped to occupy a lot of the mind share and discussion share at G2E, but maybe next year.
There'll be many opportunities, I'm sure. You outlined what from the outside would be a very ambitious growth plan in which you would go from about $35 million in revenue last year to about $230 million in 2023, $500 to $600 million by 2026. And at that point have EBITDA margins of 30–35%. Tell us briefly how you expect to get there.
Okay, well, if you just look back at our recent history, as you said, $35 million top line last year, we actually achieved the same in the last second quarter financial period. So in just 3 months, the last quarterly period, we achieved the same top line yield as we did for the entire year of 2020. So very, very exciting period of time for us. We have the Coolbet business ramping. We just secured our very first client for GAN Sports in Nevada, Red Rock Resorts, or otherwise known as Station Casinos. Massive client win for us, highly strategic, validates the $200 million acquisition of Coolbet that we consummated at the beginning of the year. So there's really two sides to the business, as I touched on during Investor Day. You've got the B2B side of the business, which is predominantly here in the United States, although we're extending towards the end of this year into Ontario and by extension the rest of Canada. And we'll be making appropriate announcements as to our client's identity up there in due course, which again, we'll signal on Investor Day. We also have B2B in the regulated market of Italy. So we have a European dimension, but again, that's relatively modest all told. You know, more than 95% of our B2B revenues are coming out of the United States specifically this year. But Italy is on a strong growth path, as is, of course, our kind of core key B2B business here in the United States. And it couldn't be more exciting. We've just switched on Arizona in September. We just literally just turned the key on Connecticut iGaming for FanDuel Group. Very exciting to turn that on and successfully get there on day one again, which is a critical kind of operational commercial priority for all of our clients to be live on day one, as we did in Michigan in January of this year when we brought live 3 clients simultaneously on day one, which is probably one of the largest historical accomplishments of any B2B provider. And I do believe that we lead the US industry today, and that market leadership will continue for the foreseeable future. We do see, just like in the recent client win of Red Rock Resorts, there was one primary competitor, and I think that has remained the same throughout this year and will remain the same in the future. So it's a very, very interesting space, but the B2B business is on a solid secular growth cycle, and we're simply expanding into more US states at the request of many of our large operator clients, and we will continue to benefit specifically from the iGaming Super RGS product proposition that we're literally activating before the end of this year. In fact, we expect to have 2 major B2C operators live before the end of this year. Now, these are always subject to the caveats of technical certification and regulation, but if you think about the 2 sides of the business, in B2B specifically, we're either the platform or we are a Super RGS provider. And the platform opportunity, we think, is directionally 1/3 of the overall market, needing to leverage B2B technologies such as GAN, and we are the sector leader. Secondarily, you've got the Super RGS or content aggregation and distribution side of the business, where we expect to have more than 90% of the US industry leveraging our iGaming content portfolio, led by, of course, the Ainsworth portfolio that we worked in partnership with them to become the exclusive distributor over the course of the next few years. So very, very exciting relationship. So under the hood of B2B, you've got the platform business and you've got the iGaming content aggregation business. And both of those are going to be, you know, key drivers of growth as we go out from state to state to state. And we've delivered nearly 7 new client launches in new states year to date, which is a pretty major operational lift. And we expect many, many more next year and going forward. So over on the B2C side, that's the acquisition of Coolbet.com. On the B2C side, we see, again, secular growth coming out of Latin American markets, where Coolbet has already taken the podium in terms of market dominance. in multiple individual markets down in Latin America. And secondarily, they have a European business that is also caught in a fairly strong growth cycle, perhaps not as aggressively strong growing as the Latin American markets are. It's more Latin Americans simply move online and start getting credit cards and start engaging with mobile sports gambling and other gambling opportunities. So really, we're looking at geographic expansion in Latin America. We're looking at B2B expanding into Canada, and then internally within the domestic United States, we're seeing the Super RGS offering switch on before the end of this year, which increases our overall take rate. And we're looking at just shy of $1 billion in gross operator revenue delivered to all of our clients just this year, and that will more than double as we sweep into next year. So when you look at the growth profile, I mean, we're currently guiding to midpoint $130 million top line for this year. EBITDA margins will normalize on a quarter-by-quarter basis as we go through this investment cycle, as we gear up to properly serve all of our B2B clients in the way that they are asking to be served, which means more engineers, more engineering bandwidth. Because just as I predicted in 2019 that a car crash was coming, well, the car crash actually came already. Michigan and other states launching this year. It's been an incredible scramble to serve all of our diverse clients' requirements. And we just see that continuing to accelerate as we go into 2022. So near term, we're looking at spectacular growth, and we're projecting revenue in 2023 of between $225 million and $250 million. So that's $250 million of revenue, which when you think about, 2023 is starting in just, slightly more than a dozen months' time, that is the growth path that we're on at the moment. So super, super excited to present the investment thesis last week, and it's of course all pre-recorded and available for replay on GAN.com should anybody wish to go and review the materials. But it's an exceptional growth environment, and it took us 10 years to be ready to capture that growth for our stakeholders. So this is not an overnight success story, as the old joke goes. We haven't come a long way in a short time. We've come a short way in a long time, and there's a huge amount of growth ahead of us going forward. And crucially, when you study the EBITDA margin range that we provided, 30 to 35%, again, you look at normalized B2C margins at 20 to 25% EBITDA, and B2B normalized margins at 35 to 40%. So really, it's when you aggregate them together, you drop out a 30 to 35% adjusted EBITDA margin range, and that is entirely achievable. We have achieved it in the past. We are on a great glide path to achieve it again in the future, and we're very much looking forward to demonstrating the credibility of our growth forecast, getting to up to $600 million in top line revenue with those normalized adjusted EBITDA margins is absolutely achievable. And it was one of the great things for me to do personally as CEO, to present the depth and scope of our management bench on Friday of last week. Don Ryan, Chief Operating Officer, Anders Carlson, Divisional Head of the B2C operations. These are experts in their field, and it's a true privilege to be able to demonstrate our management leadership capability to the broader marketplace.
Yeah, one thing I thought was pretty evident from your presentation last week is what you just addressed now, and that is you're not just Dermot. You actually have a good, experienced management team with a broad range of expertise. The other question I thought that you answered very effectively last week was this question about what happens if operators begin to take their technology in-house, as we see with Penn National is going to be doing as they acquire Score Gaming, for example, Score Media. Tell us why that is not only from your perspective not true, but perhaps the opposite, that you have a competitive advantage in terms of technology.
So always think about the functional and operational reality of highly complex enterprise software. That's what this is. You can guess at what your operational requirements are from abroad. For example, if you're a European company looking to project into the US, you can guess at it. But unless you've had the actual operating experience over many, many years, you don't have a functional capability to execute against whatever the opportunity is. And the only way of developing operational capability isn't guessing and developing in isolation. It's actually operating. And that's a feature of many enterprise software companies in all walks of life and all regulated industries. Our technology asset is implicitly more valuable as we run from state to state to state, and we prove it out and match all the different exacting regulatory compliance requirements and functions that each individual state needs. So the fact that we are now substantially multi-state, we're in all of the iGaming states, we're in the vast majority of the online sports betting states, and that will continue to be true as the ripple caused or created by New Jersey, first in 2013 with iGaming, and then in 2018 with sports betting and leading the PASPA repeal, that is rippling outwards inexorably. And the multi-state capability of GAN, one app, one online account, but multiple states, multiple products, that is truly scarce capability. And you can't just invent that. You actually have to drive down the road as a car and accumulate the operational grit on the vehicle's body in order to be a credible racer. And that's one of the major, not just early competitive advantage that the GAN has enjoyed, it's a continuing competitive advantage. So as we just launched in Arizona, we just launched in Connecticut, we had to do all the development exercises in order to be compliant with both of those new states, and we have more to come with Louisiana and Maryland. So if you think about the intrinsic value of our core technology asset, I think, yes, it's software, it's also people. Enterprise software is only as good as the people that you have who are developing, engineering, and operationally deploying it for your clients. And we have an extraordinary, strong track record of client success, not least the FanDuel Group, but also all the other diverse clients that we enjoy for real money gambling here in the US. And in fact, Red Rock Resorts, Station Casinos, I think the fact that they chose us to be their core strategic technology partner is a massive glowing indictment of our team's capabilities. And that's not just the technology, it's of course also the people, because there is a huge amount of trust invested in a strategic technology partner by the operator, the casino operator client. And Station Casinos is one of the most respected groups in the Nevadan retail gaming market. They obviously dominant category leader in the locals market. And they spent multiple months running a structured, RFP process, significant diligence undertaken by them on multiple different potential vendors. And GAN, very happy to report last Friday, was given the opportunity to enable them. And that's online sports from CoolBet, retail sports that we demonstrated at G2E, and in many respects, we leapfrogged the retail kiosk capability. We transformed the experience, and that took the CoolBet team directionally 9 or 10 months in order to identify what the existing retail kiosk sports gambling experience was, and then design something that's just that much better. And I think it's not a selfish CEO saying this. From all anecdotal, objective industry research reports, the kiosk over-the-counter capability that GAN demonstrated is substantially better than anything that exists today on the retail gaming floors or retail sports books of America. So couldn't be happier to be demonstrating the capability, not just our technical capability, but also the people capability, and having 80 plus traders who've been trading US sports, and of course many international sports for in some cases 20 years plus. Having that capability inside CoolBet was one of the key reasons why we acquired the business. So B2C operations, in many respects, provide the missing pieces of the jigsaw puzzle that you absolutely need if you want to be a credible technology vendor of managed trading services, not just the technology in splendid isolation.
So we always think about GAN as an online company, but you are also now in the retail space. And for those who want it, you provide full end-to-end sports betting service, correct?
Correct. Yeah, we provide the physical equipment. We install it, we set it up, we'll set up your sports book, and we'll manage it for you. So very much it opens up a new, interesting, what I call a lucrative niche within the B2B opportunity landscape, which is enabling retail sports betting really with an online technology system. So this is not about having a standalone, a silo-based technology system. This is having an online, connected, dynamic retail experience that's powered by our core enabling technology feature set. So it's a really exciting product proposition, and it's already been very well received, not just on the conference floor of G2E, but behind closed doors as we've been demonstrating it progressively over the past few months. And again, Red Rock Resorts, colloquially known as Station Casinos, is the single biggest piece of evidence, I would suggest, that what we've done was absolutely the right thing at the right time to go and acquire CoolBet and bring them into the B2B fold and prove that we can deploy that capability at scale here in the United States. And of course, Station Casinos is an already at scale online retail sports betting business in the great state of Nevada.
So really, if we were going to sum it up, we could say that several years ago, GAN was Game Account Network. And today it really is a diversified online and even retail a sports betting technology company, um, including things like iCasino in places outside the United States.
Well, Frank, it's more interesting than that, right? So I remember in the wake of the January 2018 NYX acquisition by Scientific Games, and I believe they paid directionally $630 million for that business. In the wake of that acquisition, Scientific Games made a very specific statement to the marketplace saying, we are a one-stop shop solution. We have all the jigsaw puzzle pieces here. You know, we've got platform, we've got iGaming, we've got online sports and retail sports. And in fact, the more we learned about the NYX business, the more we learned about OpenBet. You know, OpenBet is a platform provider that develops platforms for clients. So it didn't really at the time own its own technology or a version of its own technology. It can relatively easily license in the marketplace. And OpenBet, you know, I don't think objectively has been as successful as the original investment thesis suggested it could be. And, you know, myself personally, I believe the one-stop shop model only works if every piece of that jigsaw puzzle is as good as it can be, because we've seen increasingly sophisticated retail casinos go, you know what, we need the best platform, we need the best iGaming aggregation system, best online casino game content portfolio, we need the best mobile sports betting experience, which is, you know, engine, we need best front end, we need all of these things. And that is now the position GAN is in today, that we have a one-stop shop solution. So it's a bit of a borrowed cloak, but I'll borrow it and I'll say thank you, Scientific Games, for selling the OpenBet division to Endeavor, because now it changes the competitive landscape dynamic substantially in our favor. So delighted to have the capability of CoolBet, delighted to have the retail kiosk capability, which kind of, you know, completes the jigsaw puzzle piece that was historically missing. And we get to demonstrate it at scale next year with our great partners at Station Casinos.
In addition to your significant announcement of your deal with Red Rock Resort, we have since had another major announcement made, and that is that Aristocrat, which has long let it be known it was going to get into the space and that it would be assertive with mergers and acquisitions, has done that in a big way by acquiring Playtech. One of the things that is true is they are paying 11.4 times trailing EBITDA. And of course, they think Playtech is worth a whole lot more than that in order to make that acquisition. What does that acquisition say about valuations as it pertains to GAN? And what does it say about any change there might be in a competitive landscape?
Well, we don't see any competitive landscape dynamics changing anytime soon. I mean, Playtech has been knocking on doors genuinely since 2011 here in the United States and has not really demonstrated their capabilities at any degree of scale. Looking at the market share numbers in Michigan, even last month, I mean, it's a rounding error on a rounding error. So as always, only the paranoid survive, as Andy Grove, CEO of Intel, would tell you, and we are appropriately robust in our positioning. We understand exactly what Playtech is and crucially is not. We also understand what Aristocrat is and is not. And, you know, beyond commenting on other third-party analyst reports, very much highlighting that this just demonstrates the value of GAN and GAN's technology and the increasing scarcity of GAN's technology. In fact, you know, genuinely, I'm trying to think about, you know, who are the other independent B2B platform providers proven at scale across multiple states here in the United States, and it's basically GAN. And we will continue to jealously invest in our competitive advantage, which are manifold. And I would also point out that Aristocrat has correctly and bravely stated that they're going to review the business if indeed they do acquire the business and try and figure out some rather inelegant compliance features of Playtech, which I definitely file under their problem, not our problem. And I think beyond that, I'm really not correctly positioned to comment, Frank, but I think your question is a great question. And we've all been digesting that for the last 24 hours. But for me, it was a very, very predictable move.
You can look at the price that they're paying, the valuation, and you can extrapolate out very quickly in the back of an envelope calculation what that would mean if those same valuations were applied to GAN on the revenue and EBITDA forecast that you provided, and it's significant.
Well, Frank, there's actually a slightly different artifact, which is if you assume Aristocrat will do the compliance review and shut down a substantial amount of revenue and probably a supernormal amount of EBITDA for the business, then in fact the valuation is that much higher again. Now, how much higher, we don't know. We'll all have to look through the inverse telescope of history in 2, 3, 4, 5 years time when all that information comes out in the public domain. But I personally think that the underlying valuation was much, much, much higher.
We've covered a lot of ground in a short period of time. Maybe we conclude by allowing you to give us the encapsulated investment thesis for GAN.
Well, we have an inherently profitable business model in B2B in that we're not undertaking customer acquisition marketing, unlike our B2B operator clients. And that's a crucial difference in the profile of our business. Of course, we have been investing year to date in order to scale the engineering bandwidth, very heavily signaled to the marketplace. Generally, we're now in excess of 700 GANsters or GAN employees worldwide. We're scaling up rapidly in Miami, right here in the United States, in alignment with our own strategy and the requirements of our clients, and just the general need to diversify and grow, because competition for talent is white hot. And I think everybody understands that just objectively. It is a very, very difficult market. However, GAN, here in the United States, we have a super compelling message for potential software engineers of all kinds, which is come and get involved at the ground floor of online gambling technology here in America. And I think that compelling pitch to the prospective future employees of GAN in places like Miami is as compelling for investors as it has ever been. And we are the largest single B2B enterprise focused on the United States. 700 people, the vast majority of which are technology engineers focused on delivery here in the United States. There's nobody else that has that level of scale and that level of commitment and that level of kind of institutional capability that's built up over coming on, let's do a point in time, 8 years of operating. And now we're in nearly 10 states with US real money internet gambling, never mind simulated gaming, where we are coast to coast with clients all over the place. And in fact, Red Rock Resorts demonstrates yet again the strategic value of simulated gaming, because we've had a relationship with Red Rock Resorts since 2016. We launched a social casino offering in 2017. And all that does is put you in a power position of incumbency as and when real money regulated gambling opportunities arise, as they have relatively recently. So Red Rock Resorts is yet again a proof point of the investor thesis. We use simulated gaming, B2B, social casino in order to engage, develop the relationship, and educate our clients as to how incredibly complicated everything is, whether it's the back office system or the infrastructure needs or the regulatory technical capabilities required to power real money gambling here in the US. Simulated is a great way for exposing the retail casino executive classes to that complexity, so they appreciate it's not just a website, it's not just an app, it's this huge system that sits invisibly behind the front end, which remains effectively a tiny outcropping on a mountain of software and capability.
Okay, excellent overview, Dermot. Thank you for your insights.
I'm delighted to see you again, Frank, and very much look forward to a perhaps normalized G2E this time next year.
Me too. Thanks again.